Stock performance. New York Stock Exchange is September 30th, 2020, using a direct listing. Now, a direct listing is different from the traditional IPO, where investment banks are usually involved. Instead, Palantir sold its shares directly to investors. Initially, Palantir's stock soared from an opening price of $9.30 per share to over $30 per share within 6 months. But then, the stock took a nosedive, hitting as low as $6.20 per share. Why? Well, some analysts and short sellers labeled the company as uninvestable, claiming it might never be profitable due to its high valuation and economic challenges like sky-high inflation. There were also concerns that Russia's invasion of Ukraine caused stocks like Palantir's that were previously trading at an all-time low to suddenly rally because something unprecedented happened, like it did with Palantir's business. With unprecedented investment in AI and semiconductor technology sectors, Palantir has had one of the most historic rises on Wall Street. The stock has seen a massive rebound, delivering a return of over 260% to its investors since the direct listing in 2020. What's driving this success? Apart from benefiting from the AI boom, Palantir has posted 7 consecutive profitable quarters, recently earning it a coveted inclusion into the S&P 500 index. Despite its floundering $300 million investment in technology companies listed via SPACs, Palantir's fundamental is far better than its supposed peers, such as Snowflake's and C3AI. With $4 billion in cash reserves and no debt, the company's commercial business is booming, showing a 55% growth in Q2 of 2024. However, it is worth noting that Palantir is still one of the most expensive stocks in the AI and software space, with a forward price-to-earning ratio of over 190. This means some analysts are still cautious. For example, RBC Capital analyst Rishi Jularia maintained a sell rating on Palantir Technologies, setting a price target of $9, even though the stock currently trades at above $30 per share. Palantir stock has one of the highest price targets, with the likes of Dan Ives of Wedbush and Bank of America with an outperforming rating and average price target of $50 per share. What's Palantir's moat and future? While it seems Palantir is competing with data analytics and software as a service companies and even enterprise software giants such as Microsoft and IBM, a major strength is Palantir's ability to penetrate several sectors, use cases, and industries with complex data integration and secure workflow demands. Another strength worthy of note lies in its business model. The company targets high-ticket clients, those with large, complex data projects, and charges a premium for its services. CEO Alex Karp has mentioned that the company's flagship product, Foundry, costs around $5 million per year for clients. This premium pricing strategy is backed by Palantir's promise to outperform competitors like Oracle and Microsoft. Another key strength is Palantir's ability to work on highly confidential projects, especially with the US government and defense sectors. At the same time, the company is expanding its focus on the commercial side, forming partnerships in AI and cloud computing. With projected annual revenue of $2.75 billion for 2024, Palantir is the only profitable AI software company in the market today. An impressive feat, especially considering the skepticism it faced back in 2021. While other companies like Snowflake's, Databricks, and C3AI struggle with profitability, Palantir stands out. Even OpenAI, the poster child of the AI hype, is expected to lose around $5 billion this year, despite its massive $100 billion value. The future of Palantir. Palantir's future is both promising and complex. The company is led by its eccentric and charismatic CEO, Alex Karp, and it has big ambitions for its software suites like PG, AIP, and Foundry. Palantir is expanding globally, with operations in countries like Japan, South Korea, the UK, and Germany. However, Palantir remains committed to its philosophy of defending Western values, which could limit its market, but also defines where it plans to dominate. This approach has garnered love from investors and criticism from skeptics. Palantir continues to innovate in AI and machine learning. Its sticky products and high barriers to exit will likely drive the company's success. But as an investment, expect the stock to be moderately volatile due to its high valuation and price-to-earnings ratio. Apart from the need to consistently show steady growth in its PG business, Palantir has to prove that its commercial side of the business can continue to grow despite its foray into the turf of bigger giants such as Microsoft, Amazon, and Google. With AIP at the core of this strategy, the company has to continue to innovate, engage, and encroach into various industries to allay fears of investors that its future growth could have been baked into its current valuation. Despite its touted and philosophical commitment to the Western democratic norms, Palantir has been struggling to get major Western military powers to adopt its PG software for defense and strategic use cases. As a matter of fact, France opted to develop its own alternative to PG. Aside the UK Ministry of Defense and Palantir's work with Ukraine's war on Russian invasion, Western European powers such as Germany are still not fully on board with PG, although Alex Karp warned that moves to build copycats of PG and even Foundry could be an effort in futility. For example, the UK's NHS spent billions of dollars on its own in-house software, with no meaningful progress to the huge backlog of patient and operational inefficiencies at the NHS, before opting to work with Palantir for £330 million over a period of 7 years. Could Palantir become the most important software company in the world as predicted by its CEO? While it's perhaps not impossible given its track record and lofty goals, but only time will tell.
Conclusion.
So what do you think about Palantir? Is it a stock you're bullish on? Or are you still on the fence? Let us know in the comments below. And if you enjoyed this video, don't forget to like, share, and subscribe for more insights on the hottest stocks and trends in the markets. Thanks for watching, and see you next time on Stockertim. Until then, keep investing, keep growing. From Wall Street to the Main Street and across the global financial markets, you are watching Stockertim, the Investors Channel.